The Boeing Company, the backbone of the modern American manufacturing sector. As one of the world's largest aerospace companies and a leading manufacturer of commercial jetliners, defense, space, and security systems, Boeing's economic presence in the United States is absolute. As America's biggest manufacturing exporter, the company supports airlines and U.S. and allied governments and customers in more than 150 countries. Boeing's products and tailored services include commercial and military aircraft, satellites, weapons, electric and defense systems, launch systems, and advanced communication systems. According to recent estimates, the company and its subsidiaries have more than 143,000 employees working in all 50 states as of December 31st, 2019. Boeing works with more than 12,000 businesses, supporting more than 1 million supplier-related jobs across the U.S. The company, however, has suffered some serious troubles in recent months. After two failed crashes of the Boeing 737 MAX in 2018 and 2019, aviation regulators and airlines around the world grounded all 737 MAX airliners. A total of 387 aircraft were grounded. Boeing's reputation, business, and financial rating has suffered after these groundings, questioning Boeing's strategy, governance, and focus on profits and cost efficiency. The Wall Street Journal reported on May 5, 2019, that Boeing had known of the issue with the system for about a year before the crash in Indonesia and in December of 2019. Boeing announced it will suspend 737 MAX production from January 2020. They are no longer even manufacturing the plane. These issues were reflected in its stock price, which fell from a high of $440 a share to about $340 a share in February of 2020. The 737 MAX problem, however, was nothing in comparison to what awaited Boeing in March of 2020. With the coronavirus wiping out the entire airline and leisure industry, it was not a surprise to see that the company fell even further to $150 a share, something that has not happened to the stock since late 2016. With this severe decline in stock price, there has been an uproar in the trading community, with many arguing back and forth on where it's headed next, back to historic levels or further down towards bankruptcy. Because of its sheer size and importance to national defense, Boeing also attracts the too big to fail talk, with many arguing that the company simply cannot go bankrupt because the US government will always be there to bail them out just because of the sheer importance and the amount of jobs they provide in the economy. Fundamentally, the company is part of an environment where there really are only two players, Boeing and Airbus. This makes operations a lot easier with competition limited, and the sheer difficulty of making planes makes it nearly impossible that new players will emerge with significant market share. Ignoring the coronavirus for the time being, it's well understood that with a growth in global GDP, there will be more and more people flying, and according to some models, these numbers will increase significantly, nearly tripling by 2036. At the end of the day, if you look at all these facts, it turns out Boeing is a great business, and there's no arguing that. But like all other stocks, just because something is a great business with decent fundamentals doesn't necessarily make it a great investment. We also have to look at the documents, specifically the financials. If we look at Boeing's past decade, we can spot the gross margin percentage, which has stayed in the band between 15 and 19%. But in general, that number does tend to average around that 15-16 number. Only in the last 2 years has Boeing's gross margin sort of jumped off the page, with 18.6% in 2017 and a crazy 19.4% in 2018. These facts have translated into massive operating income and earnings per share numbers. Margins on all assets in all sectors are constantly changing. They go up and down with pretty substantial fluctuations. Numerous market factors influence these numbers, and what the key question is what can we expect from Boeing as far as margins go in the next few years? New planes have already gotten relatively expensive these days, and prior to the coronavirus, airlines were already declaring bankruptcies. WOW Air, Thomas Cook are just a few airlines that couldn't even make it before the pandemic hit. When airlines go bust, there's a selling spree of aircraft that are usually priced well below the market price. This makes supply increase and therefore prices to drop. Boeing was already having trouble maintaining these margins, even in a perfectly wonderful world pre-coronavirus. You have the 737 MAX problem along with this epidemic, and you have a recipe for disaster. With supply on the increase due to an incoming wave of airline bankruptcies, constant 737 MAX setbacks, and a huge demand drop due to an epidemic, Boeing will be lucky to achieve even a quarter of its once 20% gross margin. Then there is another aspect to Boeing stock that has been all over the news as talks of a bailout has surfaced. If you flip the channel back and forth from CNN to Fox News to anything in between, every time there's something on besides the coronavirus, something about the economy, people are always talking about buybacks. Boeing in 2014 spent $6 billion in buybacks. 2015, nearly $7 billion. 2016, $7 billion again. 2018, $9 billion. Over the past few years, the company has spent over $40 billion on buying back stock. For an example, in 2017, when the company spent that $7 billion, Boeing's market cap was sub $100 billion. The stock price was much lower. And with that buyback going on, the stock can only go up. It's simple math from there. Financial engineering. This is reflected in the charts where you see Boeing taking off, a company with another tailwind of great margins and wonderful net income. But chances are that these margin levels and sales will not last, and Boeing will come plummeting down in the midst of this crisis, which it sort of already has. At its current price level of nearly $150, Boeing, in my opinion, is still overpriced. If we think about air travel in the next 12 months, we are ignoring a few factors that many experts are not baking into the current price. Airlines will struggle even after the lockdowns are lifted. People will have a fear resonating with them, especially older folks who will gladly place emphasis on health over fun or business. On top of all this, I believe companies which have been operating on what is essentially a mandatory remote order are slowly going to figure out that paying for so much air travel is pointless, with Microsoft Teams meetings and Zoom taking over as the primary ways to conduct business. As working from home becomes more and more popular, so will meeting from home. Even OPEC can figure it out. Just take a look at these pictures from their most recent meeting. These trends are sure to cause new plane cancellations, especially in a crowded European market where margins are already razor thin. For an example, Avalon just announced a cancellation of 75 Boeing 737 MAX jets with an estimated value of $8.4 billion. That's just one company. On top of all this, we have an incoming threat that stands to derail the world economy once again come fall. If we look at history as a lesson, pandemics usually come back in the second winter with usually much more power as well. Look at the 1918 Spanish flu as an example. Unless a vaccine is to come, we may be looking at back-to-back years where air travel essentially gets wiped away. In the short term, I believe there is some positivity in the air regarding the stock as massive stimulus, the flattening of the curve, and the ever-improving beliefs that we are close to removing the lockdown are making Boeing stock price jump up. Even Trump's comments calling the company the greatest in the world, vouching and promising that the US will do whatever is necessary to help Boeing, are helping. In recent days and over the past week, Boeing stock has jumped up from $95 a share to about $151 a share. In my opinion, this rally will be short-lived though, and shorting the stock or buying puts will prove profitable in the short term. Sure, the US government can step in and prevent a bankruptcy, but it doesn't have large enough control over stock prices, especially in an environment where so many things are going wrong. We're facing a number of threats that I outlined earlier, including issues with the coronavirus vaccine and the 737 MAX problems, which simply won't go away overnight. With this much headwind in Boeing's near-term future, I just can't see the stock rallying from here. Although the other parts of the economy are rallying, I believe this rally is false and a bear trap. There's just too many things, too many unknowns, and too much risk in the near term for Boeing to go up like this. Its gross margin can only fall down, its 737 MAX problems are not going away, and travel isn't just going to bounce back as soon as they take off these lockdowns. This is why I'll be buying a couple puts on Boeing and expecting it to touch that $90 level, which it reached last week. Thank you guys for watching. If you want to support the channel, please make sure you hit that subscribe button and check out tradingview.com. Easy and intuitive for beginners. and powerful enough for advanced chartists, TradingView has all the charting tools you need to share and view trading ideas. Real-time data and browser-based charts let you research from anywhere. Since there are no installations or complex setups, just open TradingView on any modern browser and start charting, learning, and sharing trading ideas. Please use my affiliate link in the description if you would like to support the channel. Appreciate it, guys.